Hello, this is Brian Shannon from Alpha Trends Blogspot. It is Saturday, December 16th, 2006, and we're going to take a look at a couple ideas for trading on Monday. I've got China Techfaith Wireless on the screen right now, symbol CNTF. And on this daily chart, you can see that 200-day moving average just above at about $11 a share. So we're going to make that our target here. In fact, we're actually going to be a little bit more conservative than that and just make our target at $10.50. So that takes care of the upside. Let's go ahead and take a look at how I think it would make sense to enter this stock. I think getting involved in the stock above $9.50, you would then want to put your stop somewhere down here near about $9.23. So a risk of about 27 cents. And looking for the stock to move up to $10.50 a share, where it was just a week and a half ago, would give us a 27-cent risk for about $1 of potential upside in CNTF. Next up, a listed stock, which is GenCorp, symbol GY. Let's change the scaling in here so we can see it a little bit more clearly. Might have traced out an inverted head and shoulders bottom in here. You could look at it that's one way of looking at it. And this is the return to the neckline in here. So this break past the neckline came on heavy volume. Then we've seen low volume on this pullback, or decreasing volume, diminishing volume on the pullback, which shows there's not an aggressive source of supply coming into the stock. So we want to look at volume relative, not to the 20-day moving average I have in here, but relative to the event. The event was it moved up on big volume. Relative to that, it came down on lighter volume. We've seen a little bit of volume in here. It looks like the stock's stabilizing above this 10 and 20-day moving average, which are both rising, and above the 50-day moving average as well, which is rising. So looking at the stock as far as where I think we can get involved in it and where I think it has the potential to go, I think getting involved above Friday afternoon's high, that's $14.12 right there. We don't need it to take out the day's high. Just above $14.12, and we're going to put a tight stop in here at $13.98, so just a 14-cent stop. And I think our upside target, we're going to make $15 a share. Nice conservative target. We still see this 200-day moving average up here where if the stock does continue higher, that might be an area where we find supply. But for now, we're just going to look for 88 cents of upside to that $15 level, and shouldn't risk more than about 14 cents to get it. Millennium Pharmaceutical, MLNM is the symbol there. Here in the daily chart, you can see that it broke past some resistance here. That resistance has acted as support over the last month or so. And we've got the 10-day back up through the 20, which is above the 50, and they're all advancing as well. And the stock, if you look at the weekly time frame, you can see the importance of that breakout isn't just from this year, but last year as well. So it looks like it's held on to this level. It's been a significant resistance level, and now it's been tested over the last month or so and has held a strong support. I think it's just a matter of time before the stock gets going again. So I think that, in fact, it will take a move above Friday's high. That high was $11.65. Above $11.65 is where I would consider purchasing this stock. I think you then want to put your stop at about $11.40 to be conservative. So giving it 25 cents of risk. And I'm going to make the target at $12.50 a share. So based on the risk of 25 cents, our target of $12.50 would be 85 cents away. So that's a risk of 25 cents for the potential to make 85 cents in shares of MLNM. Qualcomm, QCOM, everyone knows this stock, of course, and it looks like it's tracing out a little bit of a bottom in here. And similar to some of these other stocks we were just looking at, we've got to keep an eye on this declining 200-day moving average right up here at about 41.5. But again, we're going to be a little bit more conservative. We're going to make our target up here where it was just about a week and a half ago at $41 a share. And you can see that in this stock as well, we've got the 10 above the 20, above the 50, and they're all advancing. And it's until proven guilty. It looks like it's making somewhat, attempting to make a bottom. On the longer term picture, it might still be a little bit suspect, but I think we can still get a trade up to that $41 level. And here's what I'd like to see happen in there. First, I'd like to see it pull back to $39.20 a share. Pulls back to $39.20 a share. I'd then want to buy it on strength above $39.35. I would put my stop at 39.05, so that would be a risk of about 30 cents. And like I said, I think our target is $41 a share, so that would give us upside of about $1.65 for just 30 cents risk in a very liquid stock. So that might be one you want to keep an eye on. At the end, I've got one small speculative stock that I'm going to mention after these two shorts, and I don't name it in the front of the video because it is a speculative stock and it's not right for everyone. So if you're not interested, skip over it. But if you are, stay tuned. Let's take a look at these shorts first. Bucyrus International, symbol BUCY. This stock has been trapped below. It's tested this 200-day moving average, but it's been trapped below for about the last 2 months or so, that 200-day moving average. The 200-day moving average, or 40-week moving average in this case, is declining, and the stock is making these lower highs and higher lows. So maybe it's making a little bit of a triangle and could be due for a bigger breakdown, but what we're looking for isn't going to be quite as aggressive as what that target would indicate for a target. What I want to see happen in here is a rally up to 42.95. I'd just like to see a little continuation of this strength from Friday afternoon. We're coming into this area where there should be resistance. Let's just call it rally up to 42.85. Okay, we're going to look for a rally up to 42.85 and then sell the stock short below $42.70. Our stop would then go at 43.05. So we're looking at about 35 cents of risk. And our target in this case is going to be about $41.50 a share, bringing it down to about this level in here. And that will give us 35 cents of risk for the potential to make about $1.25 in BUCY. And ESRX, Express Scripts, here's a stock. Look at this weekly time frame first. It came down on heavy volume in here. It's rallied up the last few weeks. Diminishing volume in here. It doesn't look very convincing. We've still got declining 200-day moving average, a 100-day moving average, a 50-day moving average. They're all declining. So when we look at this, it's been holding above that 50-day moving average, but more importantly, the direction of the 50-day moving average is heading lower, which tells me on this time frame the stock is guilty till proven innocent. So what I'd like to see here would be a rally up to 68.95. and then to sell the stock short below $68.55. So only on strength first, otherwise I'm going to say the trade wasn't there, you were on your own. But rally up to 68.95, sell it short below 68.55, stop at 69.05, so all these fives, we got about 50 cents of risk is what it's looking like to me. And I think the stock has the potential to make it down towards about $67 a share. So that would give us a target $1.55 away, and we'd be risking in here 50 cents in ESRX. Now for that small speculative stock, I do own a small position in this, and it is small. So this company, though, on the weekly and monthly time frame more in particular, it's the type of stock that does get moving once in a while, and there's been a certain amount of speculation in these little stocks lately. It looks like it's getting ready to maybe make a nutty little move. So maybe back up to here. It's not going to necessarily be a target, but that's a potential area for it to move up to. You see it closed at $1.89 on Friday. Maybe it's got 30 cents of upside in there, and I think you don't want to get involved. And I'm probably going to add to my position above this level right here, which is $1.92. Like I said, I have a small position, but I'm going to kick this one out to below $1.85. So I think there's only about 7 cents of risk in there for you, and maybe about 30 or 28 cents of upside. So that'd be a 1 to 4 risk reward ratio if you want to, if you're looking at it and saying, well, only 28 cents reward, that's not worth it to me. But 7 cents of risk, 28 cents of potential opportunity in shares of Citrix, symbol CYTR.